And I guess to what extent do you see that announcement as more symbolic than anything, and just another, signal from the White House that they are trying really hard to make America the crypto capital of the world, versus how it actually gets implemented? I mean,
You know what blows my mind? Most people still think what they see on the public exchanges is the whole story. They'll pull up a chart, see XRP trading at 60 cents or whatever, and they think that's it, that's the totality of the asset. But what if I told you that's just the surface layer? What if behind that ticker, behind the little green and red candles, there's another world, an institutional market that most people never get to see? A world where XRP isn't just being traded, but it's being tested, stress-tested, and scaled in ways that retail can't even comprehend. And that's where the divide comes in. There's public XRP, the one you and I can grab on Binance, Coinbase, KuCoin, wherever, and then there's private XRP. The walled gardens, the permissioned ledgers, the test environments, the sandboxes that Ripple has built specifically for banks, governments, and enterprises. This isn't speculation. This isn't somebody on Twitter drawing lines on a chart. This is the actual infrastructure that Ripple has been setting up for years, right under everybody's noses. Now, the obvious question is, why two systems? Why can't they just run everything on the same public ledger, let it all blend together? And here's the brutal truth. Compliance, regulation, trust. Retail doesn't get how big of a deal that is. If you're a government treasury moving billions across borders, you can't risk a single dollar being contaminated by illicit transactions. Not one. Because the minute that happens, the entire system is compromised. For us in retail, if somebody sends a shady transaction on-chain, it's whatever, you shrug it off. For banks? For central banks? For regulators? That's a nuclear-level problem. That's why Ripple had to build these closed environments, these permission domains where every participant is vetted, like passing through TSA before you can even step into the terminal. And it's genius when you think about it. Because Ripple knew from day one, if you wanted institutions to adopt, you had to create an environment they trusted. They weren't going to jump headfirst into the same public pools we play around in. They needed a private testing ground. Somewhere to move massive liquidity, simulate trillions in settlements, without any risk of contamination. And that's exactly what Ripple gave them. Let me put it this way, remember the early internet? Back in the 1980s, it wasn't open. Ordinary people like you and me had no clue what was happening behind the scenes. The internet started in military bases, universities, closed loops where it was being stress-tested. It wasn't until the 1990s that the doors blew open and suddenly everyone was on AOL, Netscape, dial-up modems buzzing in living rooms. That's when the repricing of everything happened: commerce, communication, entertainment. Overnight, entire industries got flipped on their head. That's where XRP is sitting today. Public XRP is what you can buy, trade, speculate on, fine. But private XRP, that's the early internet moment. That's the military and university networks running experiments in the background. And when the two merge, when the private rails connect with the public rails, that's when you get the repricing event that shocks even the diehard holders. And people ask, but why hasn't the price moved yet? If adoption is happening, shouldn't XRP be worth thousands already? No, because you're looking at the wrong side of the system. The private rails are where the heavy lifting is happening. The simulations, the stress tests, they don't care about retail price charts. They care about scale. They care about whether XRP can carry the weight of trillions without breaking. That's what the private environments are for, to prove XRP isn't just a speculative token, it's an actual settlement engine. And you know what's wild? We've seen glimpses, snapshots leaking from those private ledgers, showing XRP priced at astronomical levels, hundreds of thousands per coin. And people laugh at that, they call it fantasy land. But you've got to zoom out. Those aren't predictions. Those aren't some moon boy pumping hopium. Those are stress tests. That's Ripple and its partners simulating what happens when XRP is carrying global-scale liquidity. It's like pressure testing a dam before you fill it with water. You push it to the extremes, way beyond normal, just to prove it can handle whatever reality throws at it. And that's the thing, those numbers aren't meant for us. They were never meant for retail eyes. But they tell you one thing loud and clear: XRP has been engineered for scale far beyond what the public market reflects. You want another parallel? Look at 1971. Nixon closes the gold window. Suddenly, foreign governments can't convert dollars into gold anymore. That one policy shift created a split between the real value of gold and the publicly tradable dollar system. For years, the public was blind. They thought dollars were everything. Meanwhile, behind the curtain, central banks were recalibrating to a new standard. And when the dam broke, gold repriced dramatically. That's exactly the kind of hidden pressure we're talking about with XRP. The public sees one thing, the private system is building something else entirely, and when the two finally collide, the repricing is inevitable. And this is why 2025 is different. For years, the missing piece was legal clarity. Institutions had their hands tied. Even if they wanted to go all in, the regulatory fog kept them cautious. Nobody wanted to risk billions moving on a system that might get smacked down as a security. But now, the fog is lifting. Market structure bills are advancing. XRP is being classified as a commodity, not a security. That single distinction removes the last excuse the big players had to sit on the sidelines. With compliance nailed down, with permission domains ready, the stage is set. So here's the picture. Behind the curtain, a dam has been filling for years. Quietly, patiently, trillions in potential liquidity have been tested, measured, contained. The public sees a sleepy chart. The private side sees a loaded spring. And when those gates open, the water doesn't trickle, it surges. That's the wealth transfer moment. That's the all-of-a-sudden shift that catches retail flat-footed. And just like with the internet, just like with gold, just like with every other massive repricing event in history, the ones who weren't paying attention will scramble after the fact. They'll chase when it's obvious. They'll FOMO at the top. But the ones who understood the split, who saw the private-public divide for what it was, they'll already be positioned. That's the story nobody talks about. The split isn't a theory. It's real. And it's the single biggest reason why XRP's chart today looks the way it does. Not suppressed. Not broken. Just waiting. Let's drill into one of the most misunderstood parts of the XRP story. Those so-called crazy numbers that leak from private ledgers. You've seen the screenshots floating around, XRP priced at $10,000, $50,000, even $100,000 a coin. Retail looks at that and either laughs or screams moonboy nonsense. But here's the truth. Those numbers aren't price predictions. They're simulations. Think about how engineers test a bridge before letting the public drive across it. They don't just roll one car over and call it a day. They load it with trucks with weight far heavier than it would ever realistically carry, just to prove it can handle the stress. Same with a dam. Before they fill it with water, they pressure test it. Push it beyond the breaking point in a controlled environment so that when the real flood comes, they know it won't collapse. That's what Ripple and its partners are doing with XRP. Those astronomical valuations are stress tests, proof that the ledger can carry trillions in settlement volume without breaking. Proof that the liquidity model works even under extreme conditions. It's not meant to show you where XRP is going next month. It's meant to prove to regulators, to central banks, and to enterprise partners that this system can run the backbone of global finance. And here's where it gets spicy. If institutions are running those kinds of tests, what does that tell you about their intentions? Do you think they'd waste time, money, and resources simulating trillions in settlement if they thought XRP was just another speculative altcoin? Of course not. They're preparing for scale. They're preparing for the moment private liquidity merges with the public markets. And this is why the divide matters. On the public side, you've got a price chart that looks like it's been asleep for years. On the private side, you've got simulations showing XRP handling volumes bigger than Visa and MasterCard combined. Two realities. One asset. The day those realities converge, the repricing isn't gradual. It's instantaneous. The order books expand, liquidity deepens, and suddenly the market wakes up to what XRP was designed for all along. This is how wealth transfer events always play out. Quietly, in the shadows, stress-tested behind closed doors. Then, all at once, the floodgates open. Retail will panic by after the fact, just like they did with internet stocks in the late 90s or gold in the 70s. But the ones paying attention right now, the ones who understand that those insane private ledger numbers aren't fantasy but preparation, they'll already be positioned when the curtain lifts. That's the brutal truth. XRP's story isn't written on the daily candles. It's written in the stress tests happening where retail eyes can't see. For all the technology, partnerships, and stress tests in the world, one thing has always held XRP back from full-scale adoption: regulatory clarity. Institutions don't move billions, let alone trillions, into a system that carries legal uncertainty. They might pilot, they might test, but they will not flip the switch until they know they are in the clear. This is why Ripple's long battle with the U.S. Securities and Exchange Commission wasn't just noise. It was the main event. For years, the shadow hanging over XRP was the question: is it a security? That question wasn't academic. If the SEC's view stuck, it would mean institutions couldn't legally hold or use XRP in the U.S. market. And since the U.S. sets the tone for much of global finance, the ambiguity kept banks and payment providers on the sidelines. But clarity is coming piece by piece. Courts have already ruled that XRP itself is not a security when traded on the secondary market. That's huge. It clears the asset in the very environment where liquidity matters most. At the same time, Ripple has been building compliance rails in parallel: licensing agreements, partnerships with regulators in other jurisdictions, and even dialogues with central banks. The groundwork isn't waiting on the SEC. It's already in motion. Now, why does this matter? Because once the legal cloud lifts, the excuses vanish. Every institution that has been quietly testing XRP in private ledgers suddenly has no reason not to integrate it into public-facing operations. They've already proven the rails work. They've already proven the liquidity model is sound. The only missing ingredient has been legal cover. Here's the thing about legal clarity: it doesn't just allow adoption, it forces it. Once the rules are set, no bank wants to be the last one through the door. They all know settlement efficiency, speed, and cost savings are existential in a hyper-competitive environment. If Bank A cuts its settlement costs by 70% using XRP, Bank B can't sit on the sidelines. They'll lose clients, liquidity, and relevance. Suddenly, the adoption curve goes parabolic. And don't overlook the geopolitical angle. Legal clarity in the U.S. doesn't just unlock American banks. It pressures global competitors. If a U.S.-regulated RippleNet corridor can move money faster and cheaper than legacy SWIFT rails, international players have to respond. That's how a technology like XRP goes from niche to systemic. So, when people ask, what's holding XRP back? The answer is simple: legal clarity is the final gatekeeper. The tech is ready. The liquidity is proven. The partners are lined up. And the moment regulators slam the gavel, the green light flips on. That's when stress tests turn into live traffic. That's when private and public finally merge. And it's why anyone paying attention knows. The lawsuit was never just a battle over labels. It was the wall between XRP being a speculative token and XRP being the backbone of global settlement. So here's where we stand. The split between private and public XRP was never about exclusion. It was about proving the system under real stress before the world could see it. The liquidity tests are done. The rails are built. The partnerships are signed. And now, the only thing left is the clarity that flips private pilots into public adoption. The moment legal certainty locks in, the excuses vanish. Banks don't have the luxury of ignoring efficiency when their competitors are slicing costs and winning clients. Payment providers don't have the option of clinging to SWIFT when corridors powered by XRP move money in seconds for pennies. Once the floodgate opens, the repricing event isn't theoretical. It's math. Liquidity flows where efficiency lives. That's why 2025 feels different. We're not talking about maybe someday. We're talking about a system that's tested, compliant, and sitting at the edge of mass activation. When the curtain rises, you won't get a warning shot. It'll just happen. The only question is, will you be on the sidelines, or will you already be positioned? Because by the time everyone sees it, the window to act will already be gone.